Hello, I'm Kent Kramer, Chief Investment Officer at Foster Group, and this is our regular collection of financial perspectives for the week ended Friday, October 23rd. Well, we're almost there, everyone. Election day in the U.S. is next Tuesday, with millions of voters already having voted in person or via email. 2020 has seen plenty of big events, needle-moving surprises, really. This one has just felt like an oncoming hurricane, with forecasters and pollsters and media going to ever-increasing lengths to tell us just how history-making things are coming up to this election. But you don't have to go back very far to hear the same messages. 2016, 2008, 2000 all heard the same refrain: the most important election in our lifetimes. Every election is important, but perhaps our friends in politics and the media have gotten just a little over the top in dramatizing the consequences this time. History books will likely remember 2020 for a lot of things, including the election cycle, but there may be some bigger things to remember this last year for. Because the election is so close, thank goodness it's so close, we thought we'd get another webinar conversation on the calendar to discuss the immediate ramifications of election results, at least the results as we know them. We're going to do this 2 days after the election on November 5th. We'll be announcing a time shortly in our Foster Group e-news. Tune in then. We'll have a Q&A time, and we'll just talk about what it is we know and don't know and how markets seem to be responding up to that time. In terms of what's happened recently in the news, if we look at some numbers from economic indicators, the data firm IHS Markit said Friday that its composite purchasing managers index rose to 55.5 in October. That's the highest reading in the last 20 months, again, showing a nice symbol of expansion of the economy in the United States. Also continue to look at employment numbers. Unemployment claims continue to drop initially, and continuing benefit claims continuing to drop as well. Another piece of news last week, existing home sales rose 9.4% in September. That's a 14-year high. So there certainly are pockets of good economic activity going on around the country. In terms of actual market performance, last week was, I'm just going to call it a relatively steady week. The orange line on top represents stock markets outside the United States. The light blue line represents the S&P 500. The green represents the NASDAQ 100, or proxies of those indexes. What you see is everything was kind of steady, slightly negative in the US, a little bit positive outside the US. Interest rates actually ticked up a little bit last week, causing the bond market, the purple line, to show a total return slightly less than zero. If we look at October markets for the month, what you'll see here is, pretty much an on-track month. Again, I show the All Country World Index, so stocks outside the United States, as well as the S&P 500, and also the Triple Q, which is a measure of the NASDAQ 100. And what you can see is for the month, all three indices, at least stock market industries, come together just slightly above 2.5%. Really, really close. You look at that call-out box on the right, you can see how closely they've tracked each other so far for the month of October. In terms of equity factors, this chart shows the outperformance of growth year to date. We've talked about this a number of times in the course of this year. Growth, or in particularly big tech stocks in the United States, have kind of led the way. That red box there showing growth stocks at 16.96. That's actually 16.9% above the S&P 500. All these returns on this chart are relative to the S&P 500 return. So you can see small companies and value companies have tended to underperform the S&P year to date. But if we look at how things are going in October, those same factors have kind of flipped. So small companies have begun to do better than large companies just in the month of October, and value companies have started to show some signs of life as well. This is pretty normal. Historically, what's happened is leaders kind of lead for a while. In this case, big tech and growth has been leading for almost 3 years. At some point, the leadership kind of flips or reverses, and value comes to the fore, or small companies come to the fore. This has been a regular historical cycle. It will likely happen again. We don't know if this is kind of the beginning of that cycle or not, but certainly large cap growth has been the leader for a while, and we expect that value and small company stocks will start to take the leadership at some point as well. So let's talk about election things a little bit, because I know it's on everybody's mind. It's just hard to ignore that election coming up next week. If you watch TV at all, your advertisements are just jamming your space every day in terms of what's coming at you. For many of you, you've already voted, so that advertising is money poorly spent. But let's just talk about what we see coming. I think the thing to really keep in mind for most of us is the need for patience, because what we're going to see with this election is a record number of ballots are going to be cast in non-traditional ways, either voting by mail, voting before the election at remote sites, all different ways that people have voted, maybe differently than before, and certainly in much larger numbers than before. This chart was in the Wall Street Journal actually over the weekend, and what it shows is states where first-class mail takes more than 6 days from date of postmark to be delivered. Now, why that's important is because in some states, you actually have to have your ballot received by election officials by election day. In other states, you just have to have the ballot postmarked by election day. So you can already see there's kind of some confusion that's likely to happen here as ballots are received and determining which ballots are valid. Are they going to be received on time? Some ballots are going to be received a week or maybe a week and a half late. In some states, those ballots are going to be perfectly valid. In other states, there's going to be a question on whether the ballot is actually valid if it was received after election day. 29 states say that you need to have your ballot in by election day. So the concern on election night, November 3rd, is that there's going to be a lot of things out there that we're just not going to know the results of. I think people who are used to watching kind of that election result like a sporting event, expecting there's going to be a finish line or a final result on Tuesday night, are going to be disappointed. I think many of you already know that, but it's just good to keep in mind when we start to hear kind of the uncertainty about the election results and the amount of information that won't be known on Tuesday night, which is another reason why we're scheduling that webinar for the following Thursday. So investors might be asking whether with all that uncertainty, they just should sit this one out. In other words, people will say, well, maybe I should just not be invested during this election period, or maybe the period from the election through the inauguration. So I just did some quick looking kind of at past elections. I looked at the last 7 presidential elections, and this is a picture of the S&P 500 return month by month, November, December, and January. So basically from the election through the inauguration. And what you see here is, at least on average, the S&P 500, 5 out of the 7 times has been positive over that period from kind of election month through inauguration month. There were 2 months or 2 years, 2 presidential elections where things were negative. You can see the tech bubble election in 2000. So that was the Bush-Gore election. Some people remember that one went to court and took a while to be decided. But in addition to the actual election result being kind of uncertain, there was a lot of things going on in the economy with the tech bubble bursting that was causing markets to be uncertain and slightly negative. And then obviously in 2008, that was a big election there. That was the Obama-McCain election, but it was coming out of the great financial crisis. So it was the end of the 8 years of George W. Bush being in office, open election. There was a lot of things going on in the economy. Actually, what happened with markets is the market finally turned in March of 2009, but it entered a pretty steep period of decline from the November election through the inauguration date and actually into February as well. So what do we take away from that if we're an investor? Well, if you're a long-term investor, we'd recommend that we just ignore it. It's certainly interesting to look at it from a historical perspective, but if you look at the average returns for that 3-month period over the last 7 elections, you can see that people who stayed invested on average did reasonably well. The S&P 500 index was up almost 2.7% on average for that 3-month period. The stocks outside the United States were up almost 2.4%. And even if you're invested in bonds, you're up almost 2%. So perhaps staying invested through this relatively uncertain time is the way to go. Now, it takes a little bit of fortitude to do that. But again, if you're a long-term thinker, these next 3 months are pretty much going to be absorbed by what the long-term economy does and what the long-term market returns do in the future. We'll see. Obviously, we'll be coming back to look at this next week and the weeks following. So what do we want to think about going into the election? I love quotes. Obviously, this is from Abraham Lincoln. And Lincoln, this is before he was elected, he was looking for a quote to talk to people about kind of how difficult times were and that times like that were transient. And what they came back with was this quote that was originally given to an Eastern monarch. So this is kind of a legendary period of speech writing in ancient history. But the quote was, "And this too shall pass away." And the reason Lincoln liked the quote and the reason the Eastern monarch liked the quote is because it's always relevant. The things that are happening right now will pass. The one thing that's certain is change is going to happen. We don't know whether the change is going to be really good or maybe not so good, but change is coming. The other thing I think Lincoln liked about this quote, and you can see it in his words, is it's chastening in the hour of pride and it's consoling in the depths of affliction. So no matter how you feel about 2020, and you might feel like it's a pretty tough year, the idea here is it's going to pass, things are going to go forward, and change is going to come. Depending on how you feel about the election, it might be a positive or negative. But again, the idea there is these things pass, history tends to go on. And so far anyway, things have done pretty well as we've moved ahead. So again, next Thursday, Jason and I will be coming back with kind of a Q&A and just some quick reactions to what's happened in the election so far. We'll look at numbers as we know them. We hope you can join us. Again, we'll be announcing that time in the Foster Group e-news coming up. And if you have any questions about any of the other things we've talked about today, or any questions at all, really, here's ways that you can contact us at Foster Group. We'd love to hear from you. We hope we do real soon, and we hope we see you next week post-election. Thanks.